Good morning. This is Josh Hayes with Hedge Plus, and here is the market monitor for Thursday, September 18th. Well, the past 2 days have pretty much been up and down to leave us right back where we were about 48 hours ago. Tuesday, we were up. Yesterday, we were down. Pretty much puts us right back in the place that we were towards the beginning of the week. I think what we're seeing is we're somewhat range bound lately. I think if we didn't have the building concerns about drought, or not necessarily drought, but dry weather and yield loss, I think we'd be just consistently drifting down. But the growing doubts about our projected production numbers, I think, are what's keeping us afloat here, kind of staying in place. Everything else is kind of just wish and assumption and hope. There is reason for optimism. Trump's visit to China, one of the things Chinese media is reporting that there are two uh, driving factors between for Trump to even decide to schedule that in-person visit to China late October, early November, and they have to do with Boeing, the airline manufacturer, airplane manufacturer, and also soybeans. So when Trump and Xi have their call on Friday, tomorrow, those are the two big things he's looking for. He's looking for something to indicate from Xi that they're willing to deal on those two things. What it does is it illustrates the importance that Trump talks to all these countries. He asks for different things and wants different things from each of them. China's the big one, and one of his top two priorities is soybeans. So the market should take that as a positive. It's not going to immediately, of course, move the market and price the markets, but it still gives us the confidence that that shoe will drop at some point. We do think a meeting will happen. We do think a deal will eventually get struck. It's unfortunate it's taken this long. But to get the deal you want, sometimes it's going to take a little longer than you'd hope it would. Uh, another news: the British Real is up at a near 15th month and high in value. They've already got elevated prices over ours. When I talk about that, one thing I want to mention is while Brazil's price is elevated over ours, it's the tariff that we have on China that makes ours then thus more expensive than what they're selling their crop for. But to every country we aren't in a tariff battle with, we're a much more attractive price crop on both corn and soybeans. And Brazil's prices are also elevated because of the high demand of product that they're sending to China. But that problem, I guess, for them has led to us being able to maintain a pretty solid pace for our exports. We're down a little bit on soybeans, but the anticipation would be that in the end, when the crop year ends next year, after say the end of this year, but before mid-year next year, that we'll have a bunch of China sales to bring us back in line with projections. On the bearish side, South American weather, they really haven't had many issues. They could use a little rain. They always have their dry and wet spells, but rain is in the forecast. They have been getting sufficient rain to date. Doesn't look like there'll be any delay towards planting, which has begun, and it looks like they have rain scheduled to make sure that their soil is not too dry during their planting period. So no issues there, nothing there to scare the markets. Weekly ethanol production did fall to a 4-month low for the week ending on last Friday. Corn used in the process did not meet USDA projections. That's something we really can't afford to have too much weakness with right now. Hope it's just a blip. It's not a pattern yet. We've had strong numbers for weeks, and you're going to get an occasional week like this, where there's a little bit of a drop off. Another big issue out there are the soybean oil processing mandates, biofuel mandates. They are pushing that down the road a little bit. They are not yet making a decision. They're opening up for public commentary and for input on whether they should move 100% of the obligations onto large refiners or 50%. They've even asked for a number of people's thoughts on 25 and 75%. It's a very muddled picture, and it basically, the way people are taking it right now is as though it's bad news for soybeans. So we'll still have to wait to see. That has brought soybean oil prices down and added some pressure to soybeans overall. I think if you absent that situation, I think there'd be a lot more optimism for soybeans especially for the way that Trump is prioritizing soybeans with trade talks with China. Taking a look at the weather, parts of the Midwest and Delta are going to be too wet next week. Obviously, in some places that rain is needed, but in other places, other areas in northern parts of the Midwest, that is not necessarily a positive, as it'll delay harvest and field work. In Argentina, the outlook is good for early spring planting, as I mentioned before. In Brazil, they have rain in the forecast, supportive of bean planting, not too much to cause delay, but enough to make sure they've got enough soil moisture. And in Canada, dry in the prairies, wet to the east. They could definitely still use some more rain in the central and western parts of Canada. International cash prices, weekly look at this. We see that Argentina is a little bit below us on corn prices across the board. U.S., Brazil, Argentina, these prices are up about $4 since last week. So prices are coming up. As ours comes up, so does Argentina's and so does Brazil's. You can see the big advantage we have right now with soybeans. If not for this, we'd be in a real bad spot. Not as though it's not as though we're in a great spot as it is, but this is certainly helpful because this is what's driving larger exports of soybeans and purchases from countries that maybe otherwise would have been buying from South America. They are turning to us, and they're keeping us close to projections so that in the end, if China does come around and buy at some point, we should be able to get pretty well back on track. A wheat market, a little bit of a reprieve. We have now gone higher than a lot of countries. We're higher than what's coming out of the Black Sea, Ukraine. We're higher than Russia, right on par with the Baltic wheat. But Russia now has an export tax here for the next week, and they've also had some difficulties bringing the wheat to market, and the same goes for Ukraine. So we may not be the lowest price wheat anymore, but we're certainly still the primary, option for a lot of places. So corn and wheat sales should definitely continue to be strong, and so should soybeans. So that'll definitely help mitigate what should be a very large crop this year. Finally, taking a look at overnight prices, corn flat, soybeans down about another 4 cents. Again, that has a lot to do with the uncertainty and doubt about those biofuel exemptions. And the wheat market's up a couple cents, and I'm pretty confident that that has a lot to do with the situation there in Russia, them having to put that export tax on, making a lot of countries turn towards us. But overall, in the past 48 hours, corn only up about a penny. So we went up, we went back down. Soybeans down about 7 cents overall, and wheat's up about 4 cents since Tuesday morning. That's all for today. That's all for this week. Tomorrow we've got Jason's Feedlot Focus, his video talking about the hog and cattle markets. And aside from that, I hope everyone has a great harvest and stay safe out there.